Hey everybody, Abdullah Shamari here with you. Today we'll be going over one of my other stocks that I've been monitoring and keeping an eye on. It's a project management company, SaaS company, Asana. Company that has great management. It's quickly increasing its user base. We'll be going over the company's management, the company's financials, and finally what we can expect from the next earnings call in early March. Find out at the end of the video if I'm holding a position in Asana. If you aren't subscribed to my page, make sure to hit that subscribe button right now. Hit the like button so as many people as possible are able to see these videos, and comment whether you agree or disagree, or if you have other stock picks. Additionally, please sign up for my Patreon. The link is below in the description as well as in the pinned post. You'll get insight into my watch list, my portfolio, live updates on stocks that I'm looking into on a daily basis through my readings, and finally all my buys and sells as they're happening each and every day. So we're just going over through what Asana is. It's a project management / workflow solution. We can see here they have project management, they have workflow management, they have prioritizing potentially tasks, and then you can use it for various different teams, whether it's marketing teams, operations teams, sales teams, product teams, and other teams as well. It promotes productivity, helps be able to individuals to collaborate, especially from a work from home perspective. People need to be able to collaborate more. They need tools to be able to manage tasks and things that are going on, and even individually, people need to be able to have a tool that can better manage their tasks. This is one of the tools that I personally use at my company. It helps to prioritize tasks. It's helped to manage tasks between teams, whether it's between marketing, operations, sales, finance, etc. It helps to really manage those tasks and get them done and be able to follow up with individuals if they're lagging on their tasks. Next, just going over the management. First and foremost, again, as always, it starts with the CEO, and in this case, the CEO, I think, is key to the company. The CEO is Dustin Moskovitz. We might be familiar with him as he was a co-founder of Facebook. He obviously left Facebook and doesn't take an active role in Facebook anymore. However, from that experience, he veered off from Facebook, and then he started this company, Asana, in order to be able to scale this company, provide a solution for people based off of his experiences at Facebook as well, between managing teams, etc. Started off this company and has done well. Recently this year they went IPO. The IPO has done well. The stock price has gone up. Next, we can go over the actual stock. They went IPO in early October, late September. We can see here they started at $28 a share. We can see they've quickly risen to 41. After the IPO, they dropped a bit to $22 a share, and now currently trading a little over $40 a share. Just going over the financials for the company. Yeah, we don't have much history, but they did issue out their S1, obviously, as well as their Q3 earnings. A month ended October 31st. So we'll just take a look at the October 31st numbers. We can see the revenues currently about 50 million a quarter, 47, 52, 58. So they're steadily increasing their revenue. Current run rate for the last 12 months is about 200 million in revenue. We can see that they're very profitable from a gross profit perspective, 51 million in October, which is a little over 80% as far as their gross margin. So that's incredible gross margin. It's really good. They are still not profitable. We can see here from a net income perspective, they're still losing money. And that's just because they're scaling. They're trying to continue to drive sales, increase their user base, get more enterprise companies to be able to use their project management, workflow management sources. So not too concerned about the losses currently. And then when we go into their operating expenses, we can see that they're still significantly investing 32 million, 25 million, 22 million in research and development. So they're continuing to progress their products and improve their products for their customers. Next, going through their balance sheet. Again, we're going to go to the quarterly balance sheets. We can see they have over $400 million in cash. Cash obviously isn't a concern for this company. They just went IPO, so they've raised a lot of money to be able to give them some runway. One of the interesting things that I wanted to highlight is we see their current liabilities at about 142 million. However, we see that the large portion of their current liabilities are these current deferred liabilities. All of it is made up of deferred revenue, which is just a concept of revenue that can't be recognized from an accounting perspective currently. However, it's revenue that the company will recognize and over a period of time. Because they're software as a service company, there's certain types of revenue that they're not able to recognize immediately because they're performing the service to the customer over time. So they have to recognize the revenue over time. But that's very positive to see that they have such a large amount because that means that's the revenue that they could potentially recognize. They've already incurred, but from an accounting perspective, they haven't been able to recognize it yet. So that's very positive, and again, just highlights how great their financials are and how they've been able to ramp up sales and increase their customer base. Lastly, we'll go to the cash flow. Not too much of a surprise here. They're obviously using up cash from operations. They're using up cash for their business. They're not profitable. However, we expect as they scale and they continue to grow their business that this will eventually change. We'll look out for what the company says when they can potentially be cash flow positive, as well as when they might be able to become profitable. However, caveat that again, they're spending over $32 million a quarter, 25 to 32 million a quarter on research and development, which is a tremendous amount. So with that, that's a great investment of their capital so that they can continue to improve products and develop newer products. Finally, I wanted to go over the upcoming earnings. I'm expecting Asana to again increase their revenue compared to the prior quarter, and I expect them to beat estimates from both a revenue perspective as well as an earnings perspective. They will continue to grow and scale, and they are one of the best workflow and project management softwares out there in the market. I personally holding a position in the company currently. I bought the shares back when the company was trading at $28 a share, and will continue to hold long term as I think the company has at least 5x potential growth. These are my thoughts. Let me know what you think. As always, make money, enjoy life. Peace.